important people in the. Yeah, that's nice. Two important persons in this webinar, which is Mr. Roopesh and Mr. Ravi Jawani. We are all gathered here to gain some good knowledge from you, and this will be a very fruitful session. First of all, I thank the Almighty that we are doing very well and our life is really normal. And also, we thank the leaders of this country who is really taking care in the best way for our safety and security. And I have never seen anything other than a normal life being in Dubai or being in UAE. Everything is very normal. All shopping malls are full, hotels are full, and people are moving around, and still the traffic jams are there. So this shows that how much care, in fact, the leaders have been taking care for every residents of this country. With apart from this, I welcome everybody once again. And yes, there are little bit of ups and downs in our business, and that's why we thought that instead of meeting together and in a short notice arranging it, Mr. Rupesh and Mr. Ravi Jawani was approached, and our request was accepted wholeheartedly by them. And today it will be a very interesting session for whatever is going to be there. Like I said, before we move on, I'm sure Wasim is going to be there with us. And anybody has any question and answers, everybody will be muted, and they only have to be sending it by writing. And Mr. Anshul Gupta will be coordinating more with our two gentlemen who are here with us as a guest, and they will be really answering the questions along with Mr. Anshul Gupta. So verbally, we will not be really entertaining anybody to open their voice, but definitely everybody has a right to put in the question and answers, and whichever is scrutinized and important is felt, that will be answered immediately. Anyway, before I waste my everybody's long time to go, I appreciate and I thank Mr. Ravi and Mr. Jawani to be with us today, and we will have a wonderful session. All the very best and good day, safe life, and happy business in future. Thank you.
Thank you so much, Mir sir, for your very motivating address. It really means a lot, from president of BMR, motivating the entire industry. Before we move forward, BMR is blessed with an amazing leadership team. We have a team, who's not only the who of the industry, but they are actually, very much they know the pulse of the industry, and we are very proud to have them. And hence, I request Anshul sir to kindly first take us through that what according to him is the current scenario of the industry, and then we take it forward from there. Anshul sir, on to you, sir.
Thank you, everyone. Welcome to this webinar. First of all, hats off to you. I mean, we should clap for ourselves for being in this industry, going through these challenging times, and still we are all smiling and trying to handle our family lives, our personal lives, our business. So hats off to all of you. We all are passing through this difficult situation where we experience every day is day with the new challenges. Multiple challenges, whether it's logistics, insurance, contracts, non-shipment, customer asking for delivery dates, and many of us don't have answers to that. So we all thought that it's a right time for us where we can inform our members, whatever information we can share. I'm sure I cannot answer, or our team, our panelists cannot answer all your questions, but we'll try our best to find out some common discussions by knowledge sharing, by learning from their experience about the law, legal terms, shipping, insurance. I'm sure we'll get more insight, we'll be more educated, and we can make more better decisions and help each other in our business. So presently the situation is no ship is coming to the main port of UAE, which is Jebel Ali. So exporting from Korfakan, Sohar, or other ports in Oman is the only way, and it is full of numerous challenges. Containers which were en route when the war started, has been randomly offloaded somewhere else, and they're stranded at various ports. Marine insurance, which used to be a partner for long term, is suddenly revoked with a 7-day notice. So we don't know what risk is covered, what is not covered, and how to cover it. Road transport insurance, we all do local transport. We never do inter-country transfer of by road. So that's another challenge where we need to know more about how can we cover our risk, because especially in these times of risk, our customers are saying that, guys, you have sold on CFR basis and you have to honor the contract. Now you cannot ship the cargo. The cost, whatever options you have after all the hard work, even the cost is so high that leave the margin aside, you have to pay from your pocket $100 to $200 a ton. And for various traders who are very similar to items which are not non-ferrous, for them it would be much more bigger hit. For example, mild steel pipes, if it has to be exported, coils, sheets, plates. So you cannot do. It's literally impossible. So this list is long, changing and evolving. We are continuously having numerous changes. But good thing is that BMR will stand with all its members as one family, as we understand each other's pain, not only my pain, but everyone's pain. And we all are sailing in the same boat. So first of all, don't worry, we'll try to find out the solutions for each other, try to help each other to the best of ability. With this, I'll ask Rajesh Bhai, Wasim,
Uh,
I'll give it to you.
yeah, I am.
Yes,
Uh,
sir. Thank you so much, sir.
Ajay.
I request Rajesh sir also to please give his perspective on the current status of the industry. So, we have on one hand the dynamic youth leader, Anshul sir, and on the other hand, we have dynamic youth leader, but with a lot of experience, Mr. Rajesh Agarwal. Rajesh sir, your perspective on the current scenario.
Thank you to the BMR team and all those who are attending and participating in this particular webinar. At a very right time, BMR has organized this webinar, and I'm sure that everybody who is attending will get a lot of insight with the present situation. And during COVID, we talked about new normal. Now we are talking about new abnormal situation. You see, first of all, I'm just coming because we have two very important advisor to us, Ravi Saab and Roopesh Saab. So what I am thinking that maybe there may be a lot of questions and a lot of thoughts which are there, which people and members and the industry would like to know from the experts. Actually, what is the meaning of force majeure? This is a question mark which everybody has in his mind, whether force majeure is there or not for UAE shipment and non-UAE shipment. Vessels which are at the port, whether in the third port or here, the shipping line, they are asking X amount, Y amount, Z amount, which is like $2,000, $3,000. Can they charge this amount or not? Why I'm telling this thing? From the experts, we would like to know, because these are the common questions which we all would like to know. Even at the discharge port, a lot of local agents, they are asking amount equivalent to $2,000, $1,000 for giving the delivery order. Whether DP World can charge, or is there any other way they can waive, or we can pursue them to waive the storage charges? Because once we have put the containers in the port, as because there is no vessel, so they are unable to move the containers. There are some materials which are standard on the vessel, some containers, which are in and around Jebel Ali, in Sharjah, in Anchorage, and they are coming up with a big invoices. Can they charge? God forbid, if anything goes wrong, because insurance is not covered, what is going to be our stake in that case? Whether we can claim something or not. So these are the basic things which everybody is suffering right now, and we would like to know from the horse's mouth, from the experts who are available here, and because these are the genuine problem which is being faced by most of the exporters. I must tell you that we none of us probably we are involved in bulk vessel. We are only 20 feet and 40 feet container cargo. Even in our industry, there is no reefer cargo. These are normal 20 feet and 40 feet containerized cargo. And now we would like to know your views, and members will be benefited out of your thoughts.
Thank you so
Very
much,
much.
Rajesh sir. Thank you so much, Rajesh sir, on giving us the great insights that you've just given us. So, I would like to introduce the first guest speaker of the evening, Mr. Roopesh Punjabi. He is the director and the co-owner of Ernest Insurance Brokers LLC, advisor, risk management consultant. Mr. Roopesh Punjabi is a co-owner of Ernest Insurance, a leading insurance brokerage firm in Dubai, established in 2004. With deep expertise in general insurance, he specializes mainly in marine cargo, engineering, and trade credit risk insurance, along with designing affinity schemes for institutions such and universities. Known for his strategic mindset, he has consistently developed and executed innovative corporate policies and that enhance operational efficiency and client value. We welcome you, Mr. Rupesh, to this amazing webinar come podcast, and we would like from here on to please enlighten our audiences on the current scenario.
Before we would start, I would like to inform our panelists that we have more than 120 participants waiting for you all now.
Or thank you very much for great introduction, Wasim. Thank you very much, everyone in the room. And I say good afternoon to everyone, to the panelists, and as well as the attendees attending this. We heard from Anshul, we heard from Mr. Rajesh, we heard from the president that we are into the challenging time, and the purpose of this webinar is to bring, which is very important point, is clarity to the traders, that how their insurance will respond in a situation where your containers are now stuck, left over at different ports. And from our knowledge, being in UAE with 35 years in insurance industry, I will do my best to help you answering these questions and help you mitigating the risk the way on the insurance part of it. The whole purpose when this information, when this came to me from Wasim, we said, yeah, let's share the knowledge and try doing industry help that we can help you out with this challenging times in terms of costing and how you can protect your cargo. The whole thing is protecting a cargo amid war risk. And I will also, if time permit, touch base on political violence, which is not related to cargo, but how we secure the assets. I'm not telling now because the whole purpose is to answer your questions and clarify your doubts. So without wasting much of the time, these are the points that my presentation will take up, which will be purely on a cargo insurance perspective. We all know geopolitical context. I will run through on a marine cargo insurance coverages that you have, and you would have seen over the past many years, and the war risk coverage where Anshul mentioned about the cancellation, how mechanism of war works, about your challenges and the responsibilities that you have going forward with insurers and shipping companies, how you're going to present the scenario so that you have a continuity of the cover for your cargo, and some thoughts on mitigating the losses. And then we'll see if there is time permits, we will go political violence, talk about it. On the questions, attendees have already heard, chat box is available, and I will leave it on Anshul to ask as and when he finds it necessary to ask. All right, so we all know we are going through whole of the month of March, a tough time. The industry is seeing difficult times, and that's the reason this webinar is going on. We know the most of the seas, which gives 20 to 25% of the energy to the world, is being blocked. Nothing is moving. From my information, there are around 15,000 vessels pass through Jebel Ali Free Zone, and in a month, around 41,000. That's what my calculation came up. And in this 1 month time, not even 5% have moved, and a lot of cargo that has been moved out of Jebel Ali port has been still lying on the Arabian Gulf seas, waiting for corridor to open, and how the insurance security scrutiny works in this volatile war premium, and the operational uncertainties that traders are going and logistics providers. Now, operational uncertainties are what? Both of you who spoke about the problems mentioned that who pays the cost while at the storage? Where is my insurance coverage ceases? These are the operational problems that every trader is going through in this room and the traders that we deal with. How to reduce the cost while the goods are lying at the third-party ports, and am I covered while my container is on the vessel? That's what the question is coming up in everyone's mind, and that's will come and clarify most of the things. On the insurance front, previously it was very easy to get the insurance done. As you guys know, it is you do a lot of imports and exports. Just send the information to an insurer with a commodity name and value, and you are insured. Now the insurers are asking you IO number. Insurers are asking you the name of the vessel, and the vessel, if it is having any Israeli or US connection, then they will not offer the cover. So these are the difficulties that have reached out to us. I'll get into the key points on marine insurance, which are the fundamentals of the marine insurance. Basically, when you have a marine insurance, you have a coverage for physical loss, damage during the transit. If cargo gets damaged en route from origin to destination, and you find the cargo is either container is missing, or you have shortage in the container, or your cargo has come damaged. This is what marine insurance in simple terms covers. And there are A, B, C types of clauses. You choose which one you want depending on your nature of goods. And the type of traders that I think in this room we have is mainly on a ferrous, non-ferrous metal scrap. So, all three options are viable for you. A being a most widest form of cover, covers accidental damage. B is a restrictive cover. It does not cover you for accidental damages, but rest everything gets covered. C is very restrictive, very, very restrictive. When I say it is a major perils only, which covers you for fire, explosion, and stranding and grounding of vessel, nothing else, and general average, nothing else. So there's a lot of misconception with the traders that when I move my cargo from point A to point B, I'm covered from door to door, and my war risk is also covered from door to door, which is actually not the case. Risk, the current situation that we are, and that's where you will have a lot of questions for us to answer to Ravi and to myself on the shipping and legal part and insurance part. How the war cover operates, basically, this is how it works. It gives you a cover only for war, strikes, terrorism, and acts, which we are currently seeing exactly the same scenario. This is what the purpose of war risk is covered. And it also covers if the vessel is captured, seizure, and detained. So if for example, now going through a Strait of Hormuz and one of the countries involved decides to capture your vessel and your cargo is on board, you have a cover for that, provided war risk cover is taken. And I will come to it in a minute, because these are the questions that you will have, and you might get answers as we progress. And most importantly to everyone, war risk is only available while the vessel is high seas or the cargo is in the air. If the cargo is offloaded on a port, war cover ceases. And this cover was never before. It's not that insurers have taken this cover out because of the conflict. This cover was never provided in the past, because war on land, it becomes the respective government's responsibility to protect their sovereignty and protect the assets in and around the country. So that's the reason war cover was not taken. The handful of the companies, those who used to buy war cover when they used to ship the goods to high-risk countries. I will name high-risk countries like in the past, Iraq. We did a lot of land shipments from Qasr port to Baghdad, Qasr port to various other places where we used to offer war cover. But come this part of the world, we know we were all in the safe haven. Everything was going very good until 28th of February when things turned up into a different zone altogether. So there's no cover for war on land. Plus, I would also like to clarify, some of you will have a question that if I have bought a war cover under my open cover policy, I have a war cover included. And now my cargo has reached the port, but it is not offloaded from the vessel. The cover continues for 15 days, as long as it is in the vessel, on the vessel. So once the cargo offloaded or 15 days, whichever comes first, the cover ceases. That's how the current war cover operates. In the past, insurers always embedded war cover under the marine policy, under the clause A, clause B, plus war and strikes. That's how your open cover comes up. And there's a rate which was almost negligible because was going on. So insurance companies always rate war risk on the basis of the situation the day they are doing the policy. But if they find situation changes, they then take up the contractual terms and conditions, which is there in everyone's policy, a cancellation clause. Now, as Anshul mentioned, this time the situation changed here. The conflict came up. We got into the difficult situation. It's people are calling it. We are into the war, and that's how insurance came up and gave a cancellation notice on 3rd of March to all the traders saying, guys, now the situation is not good. There is no cover for war risk effective after completion of 7 days. Now the question will come. I'm sure many of you would have had that question. What happens if my shipment which has left prior to cancellation notice? Am I covered for that war risk? The answer to that is yes. If shipment is moved prior to the cancellation of prior to the expiry of 7 days, and your cargo is moved jebelally, and now it is lying in high seas, getting across the corridor, which is Strait of Hormuz, and it is on the vessel till the time it reaches to the port of destination or the first port of discharge. War cover remains. No need to worry about that. There may be a question that I have shipped the goods that is coming to Dubai. Okay. Now it is not coming. It is being offloaded in some other port, or it is going to some other port. War cover continues for those shipment which has been shipped prior to the expiry of the cancellation notice. I'm using the word prior to the cancellation notice few times because anything that you have moved before 10th of March will have a war risk cover till the time cargo is first offloaded to the port of safety, which MSC is calling that termination of the transit to either Colombo port or Sohar port or Nhava Sheva port or Mundra port. Once the cargo is offloaded, the war cover ceases. Okay. This is how the cancellation notice will operate in any of the marine policy which is in place. Any new shipment that is moving post 10th of March, it is not automatically covered for war risk. But you, as I mentioned, marine is a segmented policy. You have one clause is giving you all risk cover, and you have and B cover and C cover, and the clauses for war. If you have taken normal cover A with the clauses, that cover will remain. No changes to that cover. So, for example, you get your vessel is left, and there's no hit from any missiles or drones, and vessel reaching to a destination port, and your container is missing. There's a cover available because that's where the all risk cover or clause B and C, depending upon the type of cover you've taken. What is cancelled is only a war risk. You receive a container here, and the seal is broken, and your half of the goods are missing. You have a cover in place. You receive a goods, and inside there is seawater. You have a cover in place. Anything that hits to the war, to the vessel, that is not covered to new shipments. Shipments pre-10th, pre-expiry of the cancellation notice, they all have a cover. That's how the notice period operates. I hope I'm able to get you some sort of clarification on the points that you have. Also, please note the cancellation notice is always 7 days, except for USA and Canada, which is 3 days. That's how the cancellation clause works. Now, I get into the traders' challenges that what mentioned by Rajesh ji a lot, that we have to incur a lot of cost because my cargo, which was supposed to come to Jebel Ali, now it is offloaded in Sohar port. Your cover effectively then ceases at Sohar port, because that's the point of. You will have to have a touch with your broker or insurance company to give a continuity of the cover. And the continuity of cover will be on a marine cargo policy, on a standard clauses, no problem at all, because from Sohar to the Jebel Ali, you have to bring the cargo. The standard cover, land transit is possible to cover, no problems at all. But for war risk, you need to take a permission from insurance company. You have to allow them 24 hours to 48 hours, giving them details that my cargo is now at Sohar port. I want to bring it by land. I want a war cover. They will give you a war cover rate. But if you say that, listen, some of my clients have come up, listen, I'm going to take a risk. I'm not bothered about the war risk. Please give me a normal transit cover. Normal transit cover is available quite easily. You don't have to worry at all in that way. Okay. So is that the presentation not visible, or I'm not sure?
Visible. It is visible, very clear.
Yeah,
Sorry.
the
I can
presentation
see.
is visible.
So coming to if my route is deviated, then bill of lading, contractually, as per the bill of lading, shipping companies have a right to call end of voyage, because there are certain terms and conditions behind bill of lading. They then follow if they find vessel is now not worthy to be taken to the difficult seas. And then the cost comes on you. Unfortunately, insurance do not cover up that cost, because this is some cost which is insurance cover 40 years losses. These are predictable because war is now declared. Everyone will have this type of losses. And insurance company, if they start taking these losses, they will get bankrupt. So that's the reason they rate it on a war rate and give you the special cover and cover seizes on the port. We have seen certain situations where the cargo is offloaded in Mozambique port, where we have to arrange a storage there. The shipping company has arranged the storage there, and we as an insurance broker got in touch with a storage company in storage insurance for the storage in Mozambique. Similarly, in Colombo, people into that options. This will be the challenge for every trader now, how to manage the risk going forward, where the cargo is, where the cargo is not. Also on the Incoterms part of it, which I understood, which Ravi in his presentation can clarify. If you're buying it on a CIF terms, legally, I am, and from an insurance background I'm saying, but legally I'm sure Ravi will be able to add a lot value to it. If the termination of transit has happened to the port other than mentioned in the Jebel Ali port, your supplier is not responsible to pay freight cost from that port to back here, because that's where the cover ceases, because risk as per the Incoterms have already transferred to a buyer once the goods are loaded on the vessel. So this is to be, as a knowledge, is very important to be known, because you may go back to a supplier that my terms are C and F and pay me the cost from a safe port where the cargo has been offloaded to bring it back to Jebel Ali. They can legally tell you no. This is where it is there. Finally, on traders' risk, the delay. Of course, the cargo that you are involved in on a 40-foot and 20-foot containers carry a metal product. So even if they come late, they're not going to get affected. This applies mainly to perishable goods which are on the sea and they are nearing expiry. Unfortunately, they will not be covered because insurance does not cover any delays. So coming to responsibility, how you have to operate as a insured, as a business, the way we've been explaining to our client, prepare a Excel sheet with a list of shipments which are on high seas and send it to your broker or insurance company for a continuity of the cover. They will help you in the continuity of the cover. Every insurance company is helping in that. You need a transit cover from Sohar port, it's available. You need transit cover from Jebel Ali port to Jeddah port, from where most of the traders are contemplating to use through a Red Sea and then go further. Again, Red Sea is now again becomes questionable, because what we have seen in last 2-3 days, the threats are coming from that side as well. So we hope not, but it should not become just like Strait of Hormuz, where the blockage happens. Then we have no way to move our cargo. So tell your one of the logistic and shipping company guy, share that list. Insurance company will tell you, this is my war risk premium and this is my marine premium. Marine premium is already known, which is very fraction of cost, but war premium, you will end up paying it if you want to have war cover, and it is available at a higher cost than the usual one. Buy back war cover, that's what I'm trying to say. And you can keep updating that Excel sheet with your insurance company on a weekly basis, giving them this is the status, because I know on a daily basis, it is quite difficult for you to have the updates from shipping lines, because they themselves are a bit lost trying to chase the ship owners or shipping lines where the cargo is. Recently, I had a situation where I was told by one of my clients, my 10 containers are getting offloaded tomorrow at Korfakan. Make sure that, Roopesh, I have a cover. I said, fine, done. Everything done in 24 hours. I get a call following day. I got to know that my cargo is offloaded at Sohar port. Now, what should I do? So this is how you have to keep talking to your insurers and make sure that you have a risk cover. Answering to a lot of questions that I get, land transits from Korfakan port to Jebel Ali port is not a problem. Some insurance companies will include it under a normal marine open cover because we are into the same country. Land transit from Sohar also, it's not a problem. The concern that traders have is the storage risk while it is lying in Nhava Sheva, Mundra, Colombo. Talk to insurers, they will give you a solution. Why? Because there is a clause under the marine clauses. If the cargo is discharged at any other port, you have a 60 days inbuilt cover. If cargo is offloaded at any port other than the bill of lading, you have a 60 days inbuilt cover under the ICC ABC clauses. You can use those by telling your insurance cargo is at this port, please confirm 60 days cover. Now, this you have to ask permission. Most insurance company, if the port is reliable, if the port is good, they will accept. One thing important to note, while cargo lying at that port, you're covered for insurance as per the normal clauses, but you're not covered for war risk. And I see least risk if the cargo is lying there in these ports with a war. You're more concerned about cargo getting stolen. You're concerned about cargo, not reaching out to here. So 60 days that cover can be discussed with insurance company, and that's available. We have done it. You need to talk to a broker and insurance company. A quick one, then I leave it in next couple of slides to question answers. Current war rate, if you're moving cargo as a trader, you're sitting in Dubai. Dubai is a hub where you move cross trades also. So if you're moving from China to UK, you don't have to really inform insurers because vessel is not touching high seas. The seas, those we mentioned, the names that we mentioned, okay. Or they may use Cape of Good Hope, which might, shipping cost will be expensive, but insurance cost I don't see going to hit you. When shipment is coming to Salalah, Sohar, Korfakan, Fujairah, moderate risk because it is not crossing Strait of Hormuz. The rate that currently we see over and above what you are paying it is 0.28 to 0.35 of the value of the shipment. That is your additional for the cargoes to be offloaded here. The cost is not more than 0.35. We have not seen any insurance company taking it. Strait of Hormuz, obviously, there's a problem, a big problem. And I don't see any shipments now coming. So if there is anything coming, you need to take a much prior approval. You don't have a direct coverage. Rates depend on route and rates gets changed on a daily basis depending upon the situation. So this is how it is. As we are more on a cargo business, I'm not going to take much on hull and machinery, but hull and machinery has seen cost from 0.2% to 1%. Each transit for them is costing them $1.5 million extra to pass through Strait of Hormuz, because this is mainly applicable to oil tankers and energy-related products. How you mitigate the risk? Avoid high risk. There's no other way. Try to use Jeddah as a port, because Jeddah still okay. But can Jeddah accommodate large volumes? I doubt, because capacity of Jeddah is 1/3 of Jebel Ali port. And with Jeddah being in Saudi and the Hajj time going on, they will be busy with their own. But a lot of traders are using this option. A lot of traders are using Salalah option. Have they really executed that shipments? We still need to know, because I think in one of the talks earlier before introducing us, someone mentioned that transporters are costing $2,000, $3,000. This needs to be discussed and taken a call so that you have a product coming in here, and export, you are able to do that. Minimize storage duration, because that will cost you a lot when you are storing at different countries where you don't have a control. And maintain documentation, very important, so that if there's any damage, any claim, you have everything in writing that you're protected. Lastly, quickly, political violence. We talked about cargo, but we are sitting here. There's a large assets here. You have your plants, your machineries. This cover was never sought before, except by some MNC companies. But if there's a hit on your building and all that, your standard property policies will not cover that. So I have always recommended to my clients who have taken the policies also in last 1 month. It is very expensive now. Out of 70 quotes, I've seen only 3 people taking it. Those are in hospitality industry, because they feel that they are going to get hit because they are in this areas where chances of getting hit is more. But I will recommend 20 to 25% of your asset value, have that first loss basis limit, so that you are at least, because it's highly unlikely that whole building or whole plant will go. Partial damage on a first loss basis, 20 to 25% of your asset value will help you in some sort of something goes bad. Try checking that, because currently it is critical to have your assets protected as well, because you have invested a lot in this country by having the plants. I'm done with this. I'm happy to take questions. If there's any, Anshul, I leave it on you.
Yes, Rupesh, I have few questions which I received. It's keep on coming, and some questions are coming to me directly also on WhatsApp. So I'll try to address all of them. One question was that, we all have been paying since 20 years for myself, and I'm sure for 10, 20 years others, war risk premium. Now, when the war has arrived, it is suddenly cancelled by 7 days notice. So when you're paying the premium, there's no war. When actually you need the policy, it can be unilaterally cancelled. So, we fail to understand as a payer, we have been paying since long time, this premium. When it is for time for us to use this, then it is withdrawn. Do we have any legal rights around this?
It's unfortunate, but this is how insurance clauses and terms and condition works. There is no legal recourse on it. Why? I'll explain. Because when you took this policy 20 years back, 10 years back, 2 years back, or even 6 months back, the situation was not. Basis that war cover is always separate than your all risk cover that you take. Right. So when the war gets triggered, at that time, insurance company then they're telling you, listen, those shipments which are already on sea, we are responsible because we are committed. They're not making you alert that, listen, after 7 days, find a solution. And it's not for you, it's for across the globe. So when the piece is there, but when it goes down, they end up paying, because shipping line will not take your cargo without you paying them surcharges. Insurance comes later, when shipping comes first.
Right.
So
in terms of war clause, you mentioned about A, B, C. So which clause do you recommend for us, which should be the most priority for us so we can cover our cargo?
So as it is not business, it's a direct business, and your cargo is ferrous and non-ferrous. Yeah. I always have not to have A cover. B cover is fine with a non-delivery and skillful proofage, which is easily available. Because B cover, the price is just less than half of A rates. C is, I will not recommend. It will help you out and economically in terms of risk management, because any damages, it's not going to have, because your cargo, it's considered as scrap, correct?
Right. So absolutely, the value does not go down much. It might be stolen or misplaced here and there. Otherwise, damage is least possible thing.
So B plus non-delivery of a container, that should be fine for your type of business.
Right. One more question which is coming here, that we, though it is not directly related to you, but partially related to you, what is surcharge which you're paying? So shipping lines are asking us to pay WRS from all the GCC region. So you mentioned also in your map that Hormuz is the major critical area. What about Red Sea? Red Sea, still there's no war risk or nothing. Still we are paying WRS for any shipments going through the Red Sea channel also. Why is it the reason?
They have considered Red Sea as a high risk zone because of the current Houthi situation. So that's the whole reason. That's the surcharge you're paying to shipping company. And with insurance company, if you see the cost for Red Sea still not that much, but yeah, they've started also loading. I cannot put in any other way. Red Sea is at risk. So that's the reason shipping lines are avoiding, and those who are going, why they are charging you? Because they are paying exorbitant amount of war premium for their own vessels to war committee that writes their business in terms of vessel insurance, hull and machinery, because that applies to them also. If they go through that channel and if they are hit, the losses can go up to $150 million, including the cargo, and that's massive.
Right. So maybe later on we'll come back to this point, where can we transparently see how much insurance is being charged for the Red Sea and Hormuz. I'm sure there's a big difference in both of them. But WRS has been applied to us for all the cargoes in GCC, irrespective of Hormuz crossing or Red Sea crossing. So I'll come up with this question again when Ravi is coming. And one more question was that once again, I think you have already, with your presentation, you have answered a lot of questions already. Now, when we have a door-to-door policy, Roopesh, now containers lying in the discharge port or somewhere in between. So till it reaches the door of our customer, it should be insured, right? Why you have a limit of 15 days? You mentioned that 15 days limit apply at the discharge port.
Okay, good question.
When it is door-to-door, it should be until it arrives at the door.
It depends how your policy is designed. If it is port to port, if it is port to port, usually in Dubai, if the shipment is coming from anywhere in the world, Dubai, you usually get door to door cover. But if your policy is designed to have port to port cover, when I said 15 days, so let's break it out in 2 points. One, we are talking about cover, and one we are talking about the normal cover. When vessel reaches to Dubai port, and Jebel Ali port or a Khorfa Khan port, and cargo is not offloaded for 15 days, war cover ceases. But your normal cover continues. If you receive a cargo at the port and you see my container is damaged, and it is not due to any warlike situation like hit by drone or a missile, you still have a cover in place. Insurance company is not telling you no for that. But for a war risk, they are telling you no. Again, we go step ahead. Now, it was docked and we offloaded the container is kept at the port. The day container is offloaded, war cover ceases, but normal cover still remains.
Okay.
Your point 3, your door-to-door cover. Your container will also be covered while road transit from a port to a warehouse. If trailer overturns during the transit at a Jebel Ali roundabouts, which we commonly see, you still have a cover in place if you have a door-to-door cover or port-to-door cover, whatever you call. War cover on land ceases. Your main cover still remains.
Okay. Pitaraji had one question. I think Pitaraji's question is already answered with this presentation and as well as explanation. Port-to-port insurance and what Roopesh just mentioned. You're saying something, Roopesh, before we conclude this question answer.
So basically, if I open a container in my warehouse and I see my cargo is damaged because there's a seawater entry, insurance company will still pay, continue to pay. They're not saying no. Only thing, before we go to the next presentation on a shipping and legal, I will only request to everyone here is to get the list, which if you have not done, with the current details of the shipping, with a ship vessel name on high seas, send it to the broker or insurance company, get the cover and get the war risk activated. That's what I will request you to do, that because that's a prime requirement, priority for you to have your assets, your stock value protected.
So it's a very good guideline for all of us. We take insurance very lightly, but let us just give instructions to our team members that please inform about all these things in advance to the broker or the insurance company and take their approval. Otherwise, we might not even know there's an insurance cover there or not for that particular shipment. So it's,
you have to have a dedicated member who have to share once in a week update with the insurance company.
So we also need one help from you, Roopesh, because now all of us are trying to figure out from where to ship the cargoes, maybe through Corfocan, Sohor, Salalah, Jeddah, whichever port is functional. Now to cover the land transport, can you, your company, your broker, you're doing the brokering, so you can introduce us to several companies, to our members, where we can do the land transport also, because that would be required for a couple of, until the war finishes, we need that sort of coverage.
Land transit is not difficult at all. War on land is what, if you people will be looking at, obviously that's what the situation we are. There are only few offering at this point of time. I can name them, but I can also write it down to you, write it down to Wasim, who can share it. War on land covered by Qatar Insurance, Orient Insurance, and GIG Insurance. If you are with them, they are able to offer you war on land cover. The easiest way is you give them a turnover for next 2 months that I expect to ship this, whether you ship or no. They can bill you for war on land price, and then they adjust it against as and when you declare it that this shipment has now moved from Jebel Ali to Jeddah Port or Sohar Port.
But at the moment, GCC is not a war on the land scenario, right? It is just war, but war on land is more of somewhere not here, right? GCC is out of that scenario.
Yeah, but if in case your container gets hit, there's a chance.
So that is a condition of war. But I was thinking that the soldier should be on foot, should be on the ground for war on land. What is the meaning of war on land?
Or it's like through air or just like what you're seeing it now, hit by need the ground force to be there. No.
So all of us, very important. Just please, we'll share the details of the insurance company which is providing such covers. Also approach your present companies, try to find out the options, and try to cover your land transport also covered, especially when we're doing such long transit, not to Jebel Ali, but longer ports like Corfocan, Sohar, Salalah, Jeddah. It is essential for all of us for the safety of the cargo. So also there's one question. I think question was from National Fittings, Mr. Sarvanan. But your question is answered. Sarvananji said the war risk is now they're charging 0.25% to cover the war risk. But you already mentioned now, if you're shipping anywhere to this region, GCC, the premium is 0.25 up to 0.35.
0.35, not through Strait of Hormuz, but if it is coming to Sohar and Corfocan, yes. That's the prevailing current war rate, additional the rate that you're paying it, and it's available.
Right. So I hope, Sarvananji, your question is answered. That is a normal rate. So you just have to negotiate with your person and try to get the best opportunity. Regarding WRS and shipping, we'll take up the questions when Ravi ji is there. So with this, Roopesh, I'd like to thank you, and we'd like to get these contact details from you, and we can share with our members. Also, we thank you for recommending clause B. A lot of us, we don't get into details of what is the war clause, but now it is very important for us. And other clauses regarding insurance you mentioned. So thank you so much.
Thank you, everyone. Thank you very much. Thank you very much. Thank you.
Thank you so much, Mr. Roopesh, for your very informative session. It was really, really good to have you, sir. Now, Moving on to our next guest, I request Mr. Ravi Jawani to take care of the presentation, a small introduction of him. Mr. Ravi is a distinguished maritime law expert and partner head of shipping contentious at Fitch & Co. with an LLM from University of Southampton, specializing in marine insurance, carriage of goods by sea, and international trade law. He brings a unique perspective shaped by his family global trading background. He previously led the insurance department at a major offshore construction company in Abu Dhabi and has handled complex disputes at leading litigation firms in Mumbai and other countries and other cities. Under his leadership, Fitch & Co. shipping practice has expanded significantly, handling high-value, multi-jurisdictional arbitrations across the UAE and GCC. So he's a trusted advisor in high-stakes shipping and trade matters. So welcome to the webinar of Industry Connect, sir. BMR welcomes you for this, and I would like you to take it ahead from here, sir.
Thank you, sir. Thank you very much. Is my screen visible? My presentation screen?
Yes, it is visible.
Yes, your screen is visible, sir.
Thank you. I really thank BMR to invite me for this presentation. I do understand the unfortunate situations in the industry. As a maritime lawyer, we have been heavily busy with regards to the queries that have come, and I'm sure that most of the queries are also going to be raised in this particular panel as well. I really thank Mr. Roopesh Punjabi that he has clarified quite a number of things. Maritime as such, as we are on a very, it's a pretty huge and a very vast topic. What I will do is I'll take through the most important elements, which Mr. Agrawal rightly pointed out during his introduction speech, that which are extremely important in the industry for us to understand what exactly is going on, what exactly is happening, what is force majeure, what is frustration, are they the same, are they the similar elements? Can I speak about force majeure randomly? Can I literally say that my contract is frustrated? I do not want to get myself into selling or buying. I want to end the relationship either with the shipping line or with the seller or with the buyer, as the case may be it for the import cargo, be it for the export cargo. These are the elements, basically, what we are looking at. So very obviously, the ongoing situation in the Middle East has affected the trade. I will jump straight into the elements because that's where the main issues are going to come as to what exactly is a force majeure. Now, what everybody needs to understand, a force majeure is a component which has to be mandatory in your contract. Without a force majeure element or a definition in your contract, you cannot invoke force majeure. There is no force majeure if it is not a contractual term. And that's where it happens. And that's where the definition moves forward. And that is what is force majeure. What are the common circumstances? It is the war, fire, natural disasters, which is beyond the parties, which we are going through as in this particular scenario. When can it be invoked? Again, let's not forget, as long as it is there in the contract, it can only be invoked under those specific conditions which has been defined. So if you have missed out on war, it is not to be considered as a force majeure because it is not identified in the contract. And then if it is invoked, one of the queries that I had last week is that there is an FM clause, a force majeure clause. It has been invoked, but when does it end? And it ends when the force majeure event ends. So we hope that if the war situation is absolutely fine by next week, presuming being extremely optimistic, then the force majeure event ends and parties come back to their normal routine. But till that time, both the actions are suspended till the time the force majeure event is there. But again, the most important element, as I said earlier, it is an agreed term which has to be there. Now, here comes the other element with regards to that. A lot of people say that, oh, there is a force majeure clause in my contract. And I have seen that as early as last week, and that's on your screen. Now, if you read the way how the clause reads, if any event occurs that legally qualifies as a force majeure making the execution of the contract impossible, the party affected by force majeure must notify the other party in writing, 7 days as the case may be. This is a completely ambiguous clause, because it does not identify, it does not define what is force majeure, it merely refers a force majeure. And this contract will go all the way to the Supreme Court of England to understand that, whether this word, which has been identified in the terms of the contract, this is a proper sale and purchase of steel cargo. whether this clause will be considered as a force majeure event in the present scenario when the loading has stopped, when the vessels are not available, and the seller tried to invoke the force majeure clause under these terms and conditions. So the ambiguity in this particular clause has put the situation where there is no force majeure event under the respective contract, because, as I said earlier in my previous slide, the force majeure has to be very clearly defined. Now, among traders, they don't look into these clauses at the time when they enter into the contracts. And then we are caught up in a situation where we presume that it's a force majeure situation, but it is not. Now, moving on with regards to the next element comes that if it is not a force majeure element, is the contract frustrated? Frustration is basically, the threshold is much more heavier than force majeure, because frustration is an unforeseen circumstances which basically beyond control of the parties and makes the contract impossible. So is this the situation that we are in, gives us a position to frustrate a contract? Answer is no. When can that be invoked? It can only be invoked when the performance has just become impossible. To give you a very simple example, I entered into, and this has happened live in India when the export of sugar was banned suddenly one fine day. Cargo was brought at the port, and then the port authorities refused to let the sugar be exported because one day before, 24 hours before, the government came up with the law that the sugar cannot be exported. That is a frustration of a contract, because now it just cannot be fulfilled. Is delay a frustration? Answer is no. Is waiting period of frustration? Answer is no. So those are the elements which a lot of people again feel that, if the force majeure is going on forever, I might as well end the contract by considering it as frustrated. Frustration has got a very tight limitations. The thresholds are extremely high, and that is basically what is with regards to frustration. Here comes the elements which we all see on a regular basis with the bills of lading. On the reverse of the bills of lading, which is one of the clauses which I'm going to take you towards the end, which has been a lot of point of discussion even with Mr. Roopesh, and Mr. Anshul Gupta has raised those points, which will be answered in my last slide. But in the bills of lading, it is important for us to always understand what is the force majeure and war clauses. There are war clauses very clearly identified. Before we move on, this is the war clause on the bills of lading. And the bills of lading very clearly says, unless otherwise specified, freight or other charges under this contract are payable by the merchant. The merchant is the shipper, the consignee, the consignor, and the receiver. All four are considered as a merchant on as per the terms of the bills of lading, which is the clause 1. So here it says that payable by the merchant to the carrier on demand, interest at libor or the successor plus 2% shall run from 14 days from the date the freight and charges are payable. And thereafter, C says the merchant shall be liable for any dues, duties, taxes, charges, which under any denomination may be levied inter alia on the basis of freight, weight of cargo, or tonnage of the vessel. This gives the position for the ship owner to start asking for surcharges, to start calling for surcharges, whether right or wrong, whether the quantum is correctly identified. That is something, yes, as a trader, you have the right to ask the ship owner. One of the queries, again, which had come in the past, that we have been asked $3,000 per container. And the answer was, all we can do is request the ship owner, can we please have the breakdown of this kind of a surcharge as compared to just dumping it upon me to understand whether this surcharge is to be payable by me. But as long as the shipping line, as long as the carrier can give you the breakdown, the merchant, unfortunately, is bound to pay, because these are the terms which are agreed under the bills of lading. Now, there are two elements over here. One is most of these clauses which are prepared and which are drafted on the back of the bill of lading, which you will see on MSC line, CMSC GM, Hapag Lloyd, Maersk, so on and so forth. The difficulty, what happens is that, are those terms applicable in UAE? Question mark. These are terms which are drafted under the Hague rules, Hague-Visby rules, with regards to the fact that the countries who are signatory to the Hague rules and Hague-Visby rules will enforce this, will recognize this. The difficulty is in UAE, the courts may not consider this as a valid clause. Again, this has to be seen over the period of time, which means post-war, post-peace, once we see very soon, there are going to be quite a number of litigations which are going to come across pan UAE, because under the laws of UAE, UAE is not a signatory to the Hague rules, but it has incorporated certain amount of clauses from the Hague rules into the UAE law. So here we have, as most of the traders, BMR based in UAE, whether the UAE courts will look into the similar way how the English courts or the European courts or Singaporean courts look into, answer is no. But at the same time, if we are looking at the time bar element, if this gets dragged and the vessels do not come in for 1 year, then we are having an issue of 1 year time bar under the bills of lading. Moving back to the previous clauses, the ship owner will always have lien on the cargo. For all the freights, for all the charges, the clause which you just read, under those, if the ship owner has to pay any money from its pocket due to the unfortunate situations that is going on, be it the bunker prices have gone up, be it the fueling prices have gone up, being the sustainability of the vessel in the Middle East, for example, as Mr. Roopesh rightly said, the war premium. Who pays eventually? It goes down the chain. We can say it is a similar event like general average, but not a general average situation, because everybody needs to contribute as per the amount of containers which is there. I'm not confusing. General average is a different topic, but as an analysis, that's the best way of understanding that everybody needs to contribute. This is where the inflation basically triggers and comes in. This is another term on the bills of lading, and if you read at the bottom line, the following is an instruction of a clause setting up the merchant's liability. Government directions, war, epidemics, ice strikes, etc. If in connection with the exercise of any liberty under this clause, any extra expenses are incurred, they shall be paid by the merchant. Addition to the freight together, return freight if any, and reasonable compensation for any services rendered to the cargo. Again, there was a question which I said some time ago that if for war premium, if the carrier has to pay, the ship owner, the shipping line has to pay. Under its bills of lading, it has the right to pass it down the chain. And BL very clearly speaks on those terms. These are the BLs. These are very standard words used by practically CMSC, GM, Hapag-Lloyd, and most of the carriers in the industry. Here comes again with regards to the two elements of the Incoterms, which thank you, Roopesh, for covering up the insurance factor. As you are absolutely correct, bang on, that these are the two elements, or these are the two Incoterms which are largely used in the container businesses. One is the CIF and one is the CFR. The question that always comes up is that what is the difference between the risk and the title? Both CIF and CFR, the only difference between them is the insurance component. In CFR, the seller does not need to take insurance. In CIF, the seller needs to take the insurance. These are the only component difference. But the fact is that the vessel needs to be booked by the seller under both the terminologies, be it an import cargo, be it an export cargo. Now, the moment it is the vessel is booked, the moment the cargo is on board the vessel, the risk transfers immediately to the seller. Title may not, because you have yet not got paid, but that's not the issue over here. The issue is the risk transfers. And then the question that comes up that, oh, the risk has transferred under the letter of credit requirement. I have given the copy of the bill of lading to my banks. I have got my money. The shipping line ought not to come to me and demand that, oh, you have to pay for the surcharges. You have to pay for WRS. Here goes back to the definition of the merchant in the bill of lading. The shipper, the consignee, the consignor, and the receiver all are identified as merchant. So the ship owner is at the liberty, if it has crossed the Hormuz and it has gone to Indian ports like Mundra, Kandla, JNPT, and that's where again the question had come that the vessel is no more in the war zone. Why, before discharging, the vessel is calling upon the receivers to basically pay? The reason why the carriers are calling upon the receivers to pay because they have already paid. They may not be in the war zone, but to come from the Middle East area, or from the Red Sea area, they have already incurred considerable amount of money to be paid to for the war premium. And again, because it has been shifted down the chain, now the merchant is very far away. The merchant is based in UAE. The shipping line will not go to the shipper in UAE. But because the merchant is also the receiver then ought to pay for the cargo. So this is where the issue with regards to CIF and CFR only plays a role between the seller of the cargo and the buyer of the cargo, nothing to do with the shipping line. And that is where our difficulties lie. Here comes my final topic and one of the most unfortunate discussions which is happening in the industry, the surcharges. The WRS surcharges, the EFS surcharges, or the emergency fuel surcharges, or the CGM likes to call it as the emergency conflict surcharges. Why are these surcharges coming up, and why on earth do I need to pay the surcharge, which I have not agreed upon? Again, we have to go back to the terms of the bills of lading. Most of the bills of lading, and I would go as far as to say 99% of the bills of lading, have incorporation of Hague or Hague-Visby rules. Now, under Hague-Visby rules, there is something called a liberty clause. And that liberty clause, which was used in the 19th century during the World War I, World War II, is unfortunately being used now heavily in this World War 2.5, if I have to call that. Because this is the only protection that the carriers have in order to bring up the surcharges. And they have the liberty with regards to the fact that I can increase, number one, the surcharges. I can charge the surcharges because of the war premium. And at the same time, I can discharge the cargo wherever I want to. A lot of questions, a lot of clients have come back to us that my cargo was expected from Indonesia to UAE. The vessel discharged the cargo in Sri Lanka, discharged the cargo in Mundra. I have nothing to do in Sri Lanka and Mundra. And now who the hell is going to pay for all those charges? And does that give an opportunity and the right to the shipping line to discharge the cargo in a place which is not destined as per the bill of lading, on the face of the bill of lading? And the answer is yes. Again, coming back to the Hague-Visby rules, where the liberty clause, the carrier has the liberty where it foresees reasonably that there is difficulty in reaching to the destined port, it can discharge the cargo wherever it wants. Unfortunately, thereafter, once the discharge is done, if the cargo has to be moved, it is on the responsibility of the owner of the cargo. The carrier will just wash off his hands. Yes, by then, it has already earned its freight. By then, yes, it has already earned its surcharges as well. And still they have the liberty to discharge the cargo wherever they want. But coming to the surcharges, in particular with regards to WRS, which is war risk, which is being one of the most common surcharges, which is hit on everybody. And then you have the emergency fuel surcharges and the emergency conflict surcharges. Unfortunately, till the vessels are caught up on our side of a port of Hormuz, the surcharges will be paid heavily. The moment the vessel crosses, the surcharges may go down. That is what the discussions which are going on. But because the premium has already been paid, the surcharges will be hit heavily on the owners of the cargo. I think that's where I complete. I can go on, but I would like to answer more questions rather than keep speaking on my presentation.
Thank you so much,
you,
Mr.
Ravi.
Ravi. I request Anshul sir to please kindly start the Q&A session, please.
So I think all of us will agree that shipping is the best business to be in. You can always charge. We could never charge extra to our customers. They will never ever pay a single dirham extra. It's a good business. I have one question. You mentioned that under Liberty Clause, so we had the same case. Me and I think all of us had similar case with big shipping lines. They discharged the cargo wherever they wanted to discharge, wherever they transshipped, and now we already paid them sea freight. Can I claim a refund because they have discharged,
No.
not obligated?
No,
Because
because
they have
under
not confirmed the transaction. Isn't it a
yes.
one-sided clause?
Correct. The question, what I understand is, and that's exactly the same question I answered last week. The question was that the carrier never discharged the cargo at the named port of destination as identified in the bill of lading. It discharged at a place which is not identified in the bill of lading, but the moment the vessel is loaded, the freight is deemed to be earned under the bills of lading. So again, what has happened over here, sir? It is purely the contractual terms which has played and come into action. The liberty clause is not something which they are bringing it up. It is already there in the bills of lading. If you search the bills of lading, you will not find the liberty clause. What you will find is Hague rules, Hague-Visby rules. Hague rules, Hague-Visby rules, Article 5 has a liberty clause. Now, that
Oh
is
my
been
God.
invoked. Now, as a
There's
trader,
something like
very
death warrant, we
obviously,
don't even know.
you will never, I don't blame you. And it many a times people do come up and say that, is this not deceiving? That is conveniently hidden among those very tiny words, because as we all have seen the bills of lading, those tiny words written very clearly. In fact, I'm more than happy to bring up that on my screen if you permit me, because I had the bills of lading from
You can show us. I have a few more questions. Meantime, you search. So, one second question was that
sure.
the shipping line are leaving us WRS. Is there any mechanism where we can ask them a document? Okay, have you really paid the insurance cost? You are charging me war risk per premium because you pay something extra cost, and you're billing me as per the clause of the BL. Can we ask them for an
Absolutely.
evidence?
Absolutely, that's exactly the point. If you get an invoice of 3,000, just for the sake of discussion, you're getting an invoice
Yeah.
of 3,000 or 3,500, you have all the right to ask that, well, I have to pay, okay, can I have the breakdown? And these discussions are even going on all the way with the IGPNI clubs, that they are also
Okay.
getting worried that their members are issuing invoices with regards to the surcharges, be it WRS, be it anything, but there is no breakdown as why my container of 40 feet is getting $4,000, but the other 40 feet may be getting probably $2,500. So what are the bases?
Absolutely.
You have the right to ask, yes.
And also, can you tell us, they have all the liberty. What do we have to, which agency, which authority we should go in case shipping lines are blackmailing us one-sided, not hearing anything. For example, we had a big, in Jebel Ali, a lot of us, our containers were stuck up. It is one of the questions given to me also by one of our members, and they could not export. Later on, they discharged the containers, brought back the cargo to the warehouse, and the shipping line who gave the containers, they charged them port as well as line demurrage. They did not fulfill their obligation. And as per you mentioned, the deemed revenue earned, still it is not earned. It is not on board. It should be earned, deemed once it is on board the ship.
Yes, once it's loaded on board the vessel.
Yeah, so how can they charge us for this damage retention? All of us are paying heavily for the storage of these
Because what
charges.
happens is that the demurrage element comes if there is an charter party in place. Now, when there's a charter party in place, because it's a charter party, the void charter party, which determines that there is a demurrage element, where there's a more delay, where the booking note has been signed and the booking note is being entered upon and NOR has been tendered. So, sir, there are two ways of looking at it. I come with one box of container. I don't care who the vessel owner is. I just want to ship my container. I request the agent or the shipping line. I have one container to be shipped. Or I have multiple ships and I go to an agent who enters into a charter party because he knows that he's got more than 1,000 boxes with him. And then he signs into a booking note with you, which then becomes a part of the charter party. Now, the moment those things get connected, the demurrage goes down the line. The booking note identifies with regards to the demurrage, that if the master bill of lading or the master issues a demurrage notice, the demurrage will go to you. But under a normal bill of lading, the demurrage does not pass on. So you need to ask this to the question that if the cargo was brought on the shore, NOR was tendered, notice of readiness was tendered, and if your contractual relationship was directly with the shipping line is going to question you, is that, sir, I issued the notice of readiness because you booked me. And because you booked me, now I'm waiting. And I give you a period of 6 days or 5 days as per our contractual relationships to finish your loading on board the vessel. If you do not, then all the waiting period will be charged on your account. So the freight is earned for sure, but sir, the freight is earned post-loading. But before loading, if the loading does not happen, then the shipping line has the right to call upon that because of you, there was a massive delay. The cargo was not ready. You refused to load the cargo, and that's why the detention or the delay charges have been hit.
Okay. So in that case, there's a shipper's mistake. Instead of NOR, he could not load the cargo on time, and because of that,
Correct.
it could not be on board. But in
Because
normal
the
cases,
moment
when it is given to them on time, still vessel were cancelled. So in such cases, how should we approach the shipping lines where our members can, save this money?
the shipping lines, sir, are never going to give an individual clear answer, for the very simple reason being is they open a Pandora box with regards to all the difficulties. That is for a fact. So they are never going to give you a very clear answer. But again, if you insist, then their legal team will get into picture, and their legal team will try to identify all the clauses in the bills of lading which says, if we are absolutely certain with the contractual documents that yes, this is what it is, and this is what we want to do it. Your first the question was, which authority do we approach?
Yeah.
Then you have to approach the court, and then you have to threaten the vessel that the vessel will be arrested, because these are the costs under the bills of lading which we do not see how you are putting up the cost.
Also, Raviji, we have noticed my personal experience that these cases are done mainly by smaller lines. NBOCC, or these cases were more. Maybe it is wrong or right. I don't know the observation. But the bigger lines, they did not ask us much. They sent the demurrage notice. When we protested, they withdrawn everything. But the
Correct, but
NBOCC line said we also have to be alive. Yeah, we cannot leave it like this. And they started negotiating.
sir, as you would be aware, there are when the bill of lading has been issued, there are normally two kinds of bills of lading which are normally floating in the market. One is the master bill of lading, which MSC, CGM, CMS, CGM, most clients, they have issued. That's the master bill of lading. And then you have the house bill of lading. And then now you have the NVOCC land bill of lading. So the problem what happens is that with the NVOCC, they normally have the concept of booking note, where very conveniently that the subtle clause which has been put down that all terms and conditions of the charter party or the relationship with the head owners will be passed on to you. Again, as a traders, we normally do not tend to see that, but unfortunately, that's there.
Okay, so if any of our members need some expert consultancy on this, is it possible that we can engage your expertise or your company to help us out?
Absolutely, sir. That's what basically we do day in and day out. The shipping is something which we cater for in the industry. We are one of the shipping lawyers. So
that
we'll
would
be
be
more
very
than
helpful.
happy.
So we encourage our members to please submit all your, if you have any issues, to Wasim, and we'll try to take it up from our side and get the opinion. If you're legally right, then we try to do the best thing from our side as well.
Now, quickly, sir, before you move on, can you see my screen?
Yes, I
That
can
is a
see.
definition. That is the definition of merchant. If I can slightly zoom in,
Right.
it
Okay.
says very clearly, includes booking party, shipper, consignee, receiver of the goods, and any holder, person, or entity owing or entitled to the possession of the goods or of this bill of lading. The definition is massively large. Again, quickly with regards to this is the Hapag-Lloyd standard version, and there are issues with regards to matters affecting performance.
Right.
They can abandon, they can suspend anything they want. They have very clear words with regards to war, civil commotion, political unrest. Everything is identified in the bills of lading. Now, sir, as a trader, you don't, and I don't blame you, because there's so much of volatile in the business. There's so much of business happening. People don't have time to read those word by word clauses. It's only when this situation comes up, that is when this kind of clauses they trigger.
Yeah, and it's a long list. No one reads this small letter contractual
Correct.
terms.
And that's what and this is where Anshulji, the UAE has taken a very firm stand that quite a number of clauses. Again, as I was speaking about the liberty clause, and if I can show you over here, where you will not find liberty clause, but you will find it over here.
No,
Hague rules, Hague-Visby rules. Hague rules and Hague-Visby rules are the rules which speak about the liberty clause.
Okay. Okay. So indirectly, they're putting Hague rules and Hague-Visby rules on us.
And it's because Hague rules and Hague-Visby rules are incorporated in this bills of lading. You, sir, if you are the holder of the bill of lading, you are bound by these rules.
Right, right. So, Raviji, I'll just come to the questions now. I'll go from the backward list. Abdul Rahmanji wanted to ask, MUCC lines are asking us on these return containers also to pay from the day one of picking of containers. The demurrage is starting from the detention is starting from the day one when you take the empty containers out of the port. Now they're returning back. So, is it the right thing? Is it fair or?
I will have to, again, coming back to my earlier statement, it's important to look into what was agreed in the contract, because the right or wrong is identified there.
Right.
Whether what right was given and what right was not given, whether
What sort of
NBCC has
document you want for this, Raviji? So we can arrange
the
it for you.
booking note, yes, the booking notes and all the email correspondences, because conveniently at times the email correspondences become a part of the contract as well, if there's
Correct.
something more spoken over there. So the booking note is the most important thing, and then of course the email correspondences to understand whether the NVOCC is correct in demanding the document or demanding the detention what it can demand.
Right. So Abdul Rahman ji, can you please provide this to Wasim, and we'll take it up from here. Ramesh, you mentioned about, can you please explain more on delay in shipment and compensation clause? So what do you mean by this? I don't understand. Delay in shipment and compensation clause means. Can you
Right,
elaborate
sir.
on?
So I can
Sorry.
actually answer that. Delay
Yeah.
is never covered. The shipping line, and that's where you have the concept of transshipments. You cannot
Right.
control a shipping line. War, no war. Forget. Let's talk on the lines where, as if there was no war. You ship the cargo from Jebel Ali to Mundra. The shipping line has the right to go all the way to Sri Lanka, discharge your cargo, pick up the cargo again in its own transshipment vessels, and go to Mundra. It does not have to go directly. As long as your cargo has reached Mundra, it is good enough. So delay clauses are normally not covered, but this does not apply normally to the perishable items, because perishable, very obviously, it's a different
Right.
bill of lading. The cargo gets damaged. Until unless you have a very firm, how can you protect a delay? And the
Right.
answer to that is that you have to pay extremely high freight to ensure that the vessel goes from point A to point B, rather than
Right.
instead of point A to point B, we are choosing a
Absolutely.
cheaper vessel freight, where we are giving the liberty for the freight of a vessel to go wherever it want to go,
Absolutely.
and not
Same
go
like
from point A
cheaper
to point B.
shipping airlines we have. When you take 3 stops,
Exactly.
you can
It's
end
the
up
same
losing your
concept.
next connecting flight also.
Same concept. Same concept.
Same thing is here. One more question from Mr. Rowani is that surcharge can be one time or multiple.
Well, surcharges are there are several surcharges. Like in my presentation, as I said, that you had, let's say from Hapag-Lloyd itself, you have not only WRS surcharge, but you have even efficiency of fuel surcharge, EOF surcharges. So you may have a surcharge. Why is the WRS surcharge? Because they have landed up that kind of a premium to the insurance company. But then that is one time. And Roopesh is the right person to advise, but that would be one time they would pay for a certain period. But then the vessel is stuck in the region, it needs fuel. The fuel prices have gone exorbitantly heavy. Again, all those surcharges is everything extra paid by the ship owner goes down the chain.
Highly unreasonable. Once we sign the contract, no one pays us even a single penny. LME goes up or shipping cost goes up, right?
Now,
It's very
Anshuji, on the similar,
one-sided.
though it does, you have mentioned on a lighter note, but it is a very serious issue, because I have also received the question from traders of the import cargo that can we then pass on this charges to our respective counterparts, our respective buyers. The answer to that is, as long as you had that provisions in your contract, yes, you can. If you did not have the provisions in your contract, your respective counterpart will say, sorry, there is no relationship for me to pay those additional amount. I will only pay the purchase price for which I have contracted for.
Okay. And during the transit also, they can ask for emergency fuel surcharge also once the voyage is started. EFS can be levied.
Normally, bunkering takes place after the voyage starts. And that's why Fujairah is one of the biggest bunkering hubs. So
Right.
even forget the war element, even when the loading used to happen from Qatar, Kuwait, or UAE, the
Right.
Jebel Ali, Sharjah, the vessel used to go down Fujairah, do her bunkering, and then go forward. So
So for our members, just to
depends on
explain,
the
bunkering means where the fuel is stored for the ships. All the ships, they come to Fujairah, fill their tank with the fuel,
Correct.
and then carry on with their journey. So it's a
Correct.
petrol station for the ships to refuel themselves. That's why the EFS can be levied even after the starting of your voyage. So
Voyage
one of the
has been
interesting
commenced.
question, if any container is damaged, I think this is for Roopesh ji. If the container is damaged due to falling of debris, is it covered by VAR on land? Suppose someone has a coverage, falling of debris would be covered, right?
Roopesh,
If you've
you're
taken a
on
war
mute.
on land cover, yes, it is covered, because that's the purpose of war on land cover. If you've not taken, then no.
Because now the concern is people who moving the cargo from Corfacan to Jebel Ali, the DP World is helping them to pull it out. That's why the purpose is to tell insurance broker or a company that these are my containers lying here, we are bringing it here, give us the option of continuity of the cover. So in that war or land cover as an optional pricing broker will offer, and then you have to choose yes whether I buy it or no. But to answer the question, yes, even if the shipment that is moved from Jebel Ali free zone and now waiting for a clearance from Strait of Hormuz, and it was shipped prior to 10th of March. You have a war on land cover as long as cargo is war on vessel cover as long as container is on the vessel.
Right. So one more question. Clause B, if you can elaborate later on, maybe we'll share with you. Jupiter Metals, there was a question, more elaboration on Clause B. So is it a long elaboration or you can just explain
In simple word, I'll put it up. Clause A and B, the only difference is accidental damage is not covered under Clause B, which is of none of concern to you. Clause B covers the rest of the thing. It also covers washing overboard and earthquake in that. So along with the major perils which are covered in ICCC, and general average jettison comes along with it in all the clauses. So no worries about it. So major difference is accidental damage, which is not part of it, Clause B.
One question for Ravi, for you, Raviji. Shipping line, they're raising invoice for WRS for the containers which have already crossed the waters of Indian Ocean and they are reaching China in March. So voyage has started in January before the war. They crossed the territorial waters of the Indian Ocean and they're already in China Sea or somewhere in that region. In such cases, we can protest against such unfair charges.
Yes, to a certain extent, you can protest as long as the vessel owner did not have to pay premium whatsoever. The reason being is that after there are two worlds that we have seen, and Roopesh will correct me if I'm wrong. One before the 28th of February, and why do I say that is because we already had the 12 days of war last year, and then one is after the 28th of February 2026, where we are as of now, where we are today. The Joint War Committee has extended the war zone massively, where literally you can say nearly half of Arabian Sea has become a war zone. The whole of Oman listing has become a war zone as compared to prior to 28th of February 2026. So the moment the vessels were anywhere in that region during that period, the war premium have hit them in one form or the other. What they have, the reason why it took them time is because not that they were not willing to inform, they were also calculating as to what can be passed and how it can be passed. Do we need to first use our the liberty rights under the Hague Whisper rules and just discharge the cargo, or literally use the bill of lading terms in order to change? And that's the reason why what we are seeing in this 1 month, that the premium has hit on the first week of March probably, but now it's reached China. And now they are calculating. So yes, you have the right to ask question and they will answer.
Absolutely. Yeah.
Also, that relates to the parameters because two of our members are asking what are the parameters of WRS on 20 feet and 40 feet? It depends on the region, depends on the vessel, voyage, or it can be standard.
No, sir. It is depends on like I know for firsthand that somebody paid $3,900 for a 40-feet container, and somebody paid about $2,600 for a 20-feet container.
Right.
Well, they did not pay; they have been invoiced. My apologies. They have been invoiced, so that's why I know that there is a range, and also the region-wise where it was sent. So those things matter.
Okay. Now coming to shipping, can you advise us because we all are facing a challenge? Jebel Ali port is closed, and there is no visibility when the port is operational, but the vessels are not calling. So we all are stuck up how to ship the cargoes. What we understand, Corfocan is an option. Corfocan is not all the shipping lines are taking the containers. There's only one shipping line, Gulfliner, which is taking the containers as it is the owner of Corfocan. Other shipping lines are not coming there. Second option is Sohar, and third option is Salalah. Fourth is Jeddah. So, do you have any insight? How can we ship the cargoes? All our members are curious to know what are options, how to make our shipments.
The answer to that, sir, is that you or the members need to get hold of good ship brokers who can advise which vessels are willing to call. be it containers or be it bulk carriers. To give you an example, just about 3 weeks ago, we landed up in a dispute where the cargo of sulfur was supposed to be shipped from South Africa to Pakistan. But because of the Joint War Clauses Committee, the way they expanded the area, all the ship owners refused. Having said that, is it everybody refused? Answer is no. The good ship owners who were charging $20,000 per day, they refused. But if you're willing to pay them a premium of $100,000, they're more than happy to go. Persian Gulf vessels, tanker vessels, first-hand information, the tanker vessels of the VLCCs, which were for 44,500 metric ton dollars per day, has become $500,000 per day in Persian Gulf itself. So there is a premium for it. There are vessels which are available. They are willing to take a risk. Yesterday, we all heard that one of the vessels was unfortunately hit outside Dubai ports, but the fire was put off immediately and the vessel is already en route to China. So the point is that everything is for a premium. So which vessels are available? So the ship brokers are the right people to advise that X vessels are willing to go, Y vessels are not willing to go. Now, why do I say that? Is because I believe there was an announcement by Maersk and MSC that they just do not want to call the Gulf region.
Right.
So that those vessels will just not call. But there are people who are willing to take that risk, which is not correct if you have to ask me, to come through the Strait of Hormuz. They should either take the cargo from Sohar or from Fujairah, if it's possible, or Corfocan, but because that's a risking of life coming through the Strait of Hormuz.
And can we make the shipment from here to from UAE to via Sohar port? I think there's some bonding is required because the cargo has to be custom cleared in UAE and then custom cleared in Oman.
Of course, sir, because you're entering a different country. Oman customs are going to ask for clearance. I think what I have been told, I'm not 100% sure, but they are giving a bit of a leverage because they do understand that the cargo needs to be either shipped out or shipped in, and that's the only way that can be done is through Oman. Jeddah is also an option, but Jeddah, in my opinion, I think if you see at the geographical map, it's a bit too long of a distance to go through Jeddah.
Only expensive cargoes we can bear to ship through Jeddah.
Correct.
Otherwise, very difficult. What I also understand, maybe I can share some insight with our members. Corfocan is working, but there's only one shipping line which is operational, and they are increasing their charges every day as we all are approaching them, and they are the only option. Inward, what we understand, inward, all the essential goods are coming comfortably, but outward, only very few shipping lines are taking the cargo. Rest, all the containers are going empty. This is very stressful, but this is what I know, which I'm sharing with you guys. So our port, we can make the shipment.
Sorry, Anshul bhai, with you gentlemen there, the most common questions which have been coming verbally to us is that every member over here, every shipper, every exporter, especially even Rajesh bhai can get involved in my question this to answer. Everybody are feeling that yes, they only hear that this shipping company is taking the containers and they're getting quotations $2,000 to ship, for example, to Mundra via Corfocan or via Sohar. Is this really a scam which is going that they are just getting the containers released, taking it, and then there is no reply? And I also heard that from day one, the container goes to the port, the detention starts from that minute itself. And the shipping company is directly for people who have really given the chance to export the containers. They are saying, we don't know when the vessel will come, but you have to pay for this price. Can anybody elaborate on their experience? Is it really practically getting shipped out, or is it a scam, or what is happening with the shipping companies?
So coming to
If I can
Corfocan,
speak from the legal point
yeah.
of view, the scam element only happens that if somebody is trying to defraud. As long as if it's a very well-known NVOCC or very well-known shipping line, they can give an undertaking that if they do not perform within so and so time, they will be held liable as well. NVOCCs can give a performance bond if needed, so that you have something valid in your hand that I'm not lost my cargo and this is not a dumping element. But at the same time, the difficulty, Mr. Mir, what happens is that how can an NVOCC or an agent assure you that the vessel will come? The problem what happens with the ports is that so many containers are lying there, even from those unfortunate consignees who have just not cleared with these new consignments which are coming in. they will start hitting on the detention charges and the port handling charges immediately. But that is where a good agent and a good shipping line needs to know that I have my vessels lined up, which are coming on so and so date. So that helps. So it is again, a due diligence is required to save ourselves from the element of scam. Now, this is more from the legal point, Anshulji. Please do feel free to-
Contractual, when you are booking it up, the contractual requirements, that's what you're making it very clear that, listen, this is my cost. I'm not going to incur anything more. Then that agent, if not going to respond to you, there is a scam. Then if the agent is responding to you, telling you, yeah, there is a way I can get it, and it is happening, and put it in black and white, that contract will help you out. On the insurance front as well.
Exactly. I agree with you.
You will have a cover.
You know,
I just want to make a point. I think what both Ravi and Rupesh ji have said is valid, that you need to negotiate your contract well with the shipping company. But I think this is possible only when you are hiring the entire vessel. For people like us who are booking a few containers here or there, it is impossible to go in so much of depth of negotiating. Otherwise, you may not even get the release of the containers, because you are going to be one among the several. Unless you are really booking the entire ship, entire cargo for your bulk shipment, only then such details can be negotiated.
right.
Is that
Sanjeev ji,
correct?
Yeah. Yes.
Yeah, please, Rupesh ji.
No, yeah, I agree with you. When that's how the vessel owners and all that will see that whether my vessel is getting filled or no. But on the other side, the container vessels are moving from Sohar. We are seeing cargoes coming to Sohar. We have insured quite a number of Navashua gases coming, like argon gases. I did around 30 tanks, which is last week, and they arrived. Similarly, when you talk to them, you will be able to, good shipping agents will know what is the time frame the vessels are coming, and maybe 10 containers or 20 containers. They're not only looking into the containers 10, 20, they will have a lot of other inquiries, just like you are concerned about. There will be various other parties that are concerned about, they want to move their cargo out of UAE. So that's possible when you sit down with the right agents.
Yeah. So I'll share my experience. Sanjeev ji, we exported through Sohar. We sent the container. The cargo was supposed to leave on 26th or 27th. The voyage got cancelled. Now containers are stuck in Sohar, and unfortunately, it is copper cargo. Now we have to offload the cargo to save the storage in some friend's warehouse. I have to keep one security guard there. So it is very complicated, though it is doable. But the headache which is coming with this, sending one security car because copper container theft is, as you're saying, in war situation, it's a very big headache to contain the theft and all this. So we also did, I think I mentioned earlier also to our board members, we tried to do through Sohar. We got stuck up. Now the vessel is delayed to 6th and 7th. So we are at the mercy. You cannot change the containers. The containers has been in one shipping line. And we took the containers from Jebel Ali. We were trying to help the shipping line by helping ourselves. But now we are stuck up. So this situation, even the shipping lines are not able to control because vessels are coming and they're leaving the port without even taking the containers. Gulf Inner is doing Corfocan, but still they have very difficult conditions. What are the conditions? They only have, I think, 6 or 7 days window for the containers to pick up and deposit. Now we have to pay the export duty, which takes 3-4 days, online payment of export duty. Then you have to deposit in Corfocan, and many times because of scrap, it is under inspection, which takes also 2 days or 3 days time. To sum up, it is 5 to 6 days. The window of 7 days is eaten up by these 5-6 days. So you don't have enough time also to match the vessel. So all these challenges are evolving, challenging, but I don't know. The best thing what we can do as a traders, try to reduce our price, local purchase price to, because all these costs, the cost started from $120 from Corfocan. Now it is already touching, I think, 160, 170. If you add some damages and all, it might go up further. So we have to keep a cushion of this cost in our calculation. There's no other way. From Sohar, it can go up to $250, $300. Now in Ferris, Rajesh bhai rightly said, how can you even manage this cost? It is so high. So it is, completely difficult situation. We have to negotiate with the shipping lines, try to find out the agents who can help us in Oman to make the shipments via Sohar for expensive cargoes. And here only Kurfakan is the option. Fujairah port, is it accepting containers or is it only bulk vessels? Any
I
idea?
think it's more of tankers and bulk, but I have personally not seen. Mostly it's Fakan and Jebel Ali.
Right. It's a bunker place, so I'm sure it is vessels only.
No, Fujairah is not taking containers. Only Khorfakan is taking containers.
Yeah.
Roopesh ji, I have one question. A lot of us have, some or the other containers on board the vessel, which have not been able to sail through. Now, as per your explanation, I understand that for these cargoes, we need to apply to our insurance providers for the war risk by paying that extra premium. But then what is the validity of that coverage? Say I apply for the extra this war risk coverage today. What is the validity going to be of that coverage?
So Sanjeev ji, like I mentioned, if the cargo is moved pre-expiry of the notice period and it is on the vessel stuck in Arabian Gulf, the war risk continues. You don't have to even inform to the insurers because it has moved prior to the expiry date. Anything that is moved post-expiry date of a cancellation notice, you have to take a special approval from insurers to give you a war risk if available, and if they approve, it will cover for the whole transit till the time it has reached first port of discharge. It may not be a destination named in the, for example, Jebel Ali, and they come and tell you, listen, we don't want to carry your shipment to China. We want to drop this shipment to Korfakan or any other port. That's where the cover ceases for war, and that's where actually the marine policy ceases.
Perfect. Thank you.
That's the purpose of the cancellation notice, that we are not telling you from day one you don't have a cover. For the things that, for the shipments that have already moved, the marine open cover terms and condition will apply.
Okay.
Which is
So
covering.
just to summarize, I think we're already reaching 4:43. Just to summarize, we discussed about force majeure, that it should be completely mentioned in your contract and mentioning what are the conditions of force majeure, when it is triggered, when it is not triggered, and following. So that's very important criteria. By just war being declared, we cannot open the force majeure because the clause is not mentioned in the contract properly. So for all of us, please try to follow this. Also, one question: if the force majeure clause is mentioned, so in such case, are we obliged to ship the cargo, or can we cancel the contract, or this clause has to be defined?
So force majeure is it only suspends the obligations of the parties because of the events that are identified. What you're looking at is frustration of the contract and termination of the contract. Legally, answer is no. Commercially, that's a different thing. Now, your force majeure contract can say that if the force majeure persists for 3 months, then both parties have the right to cancel the contract. As long as those wordings are there, yes, then you can now you have an agreement to mutually terminate.
Right. And can we ask the buyer to pay for the WRS, or at least share with us? Is it also a commercial thing, or we can, as per the contract, we can do it in such
That's exactly
situation?
what I said some time ago, that passing it down the line from our side as trader, unless I do not have that clause, my counterpart will not agree. And for the counterpart to agree, the clause has to be there. So the counterpart is well aware that if I am being hit by the WRS or any surcharges or any additional cost, sir, you will bear either full or some part of it.
Right, right. Any more questions, please type on the board, or if anyone board members wants to ask any questions. I think we're already done with the session almost, but still, if you have another 5 minutes for the questions.
Well, I personally
Salam
First,
bhai.
I don't have question, but I would like to commend such a great session, which has enlightened all the members and the attendees on what is all required behind our closed doors. And we really appreciate the efforts of the speakers and BMR for such a great session.
Thank you, Salam sir. Muzul bhai, Sanjeev ji, or any of the members like to ask anything? I can see one new question. I have one question. Yeah, Hadi, can you type your question, please? Meantime, any of the board members, any questions, any of the members? So I know the biggest question is how to make the shipment from UAE. And I just shared my experience. And if any one of you has any experience regarding the shipment, please share with us so it can help other members.
Jawani sir, I have a question. This force majeure is declared by whom? Who can certify it is a force majeure?
Sir, as long as the event is triggered, which is identified in the force majeure, any of the parties can trigger. So, for example, if you have to fulfill your obligation and you are unable to fulfill your obligation, very obviously you are the one who's going to trigger it. Why would I'm sitting in India, for example. It is not my place to trigger the force majeure because it's your obligation. So the party who is unable to perform and his performance hindered under the terms and conditions which are identified in the contract, war, political risk, civil commotion, etc., etc., it has to be defined. Then, if it is hindering your obligations, you have the right to declare the force majeure.
One more question for you, Ravi ji. Mr. Hadi is asking that all the different shipping lines are asking different WRS or surcharges like Vasco, something else, ACSL, something else. So what should we do in such situation? How to benchmark it, or is there any transparent process where we can find out what are the actual charges?
Yeah, the only transparent process is by requesting the shipping line to clarify that the quantum, whatever they have identified, what is the breakdown of that quantum. That is the only way. But when we are looking at A is charging different than B and C or D, the problem is how much expenses each of them have incurred by virtue of the war risk premium, by virtue of fuel excess premium, and so on and so forth. So their costing is been basically bottled down. So there cannot be a benchmark, but there can definitely, you as a customer, you have the full right to demand. You will have to pay, but at least for your satisfaction, you can ask for the breakdown. So if you feel like challenging, eventually you have an opportunity to challenge.
So, Hadi bhai, so you can ask for the cargo which is already arriving or arrived at the port. You can ask for these charges. And if you have multiple cargoes, you can compare these charges also. Who's charging what? And for the new bookings also, you should ask for the breakup and then negotiate with them that this line is charging this one. Why are you charging all these charges? This is the breakup. So always, I think it's coming back to being more aware of the charges and comparing commercially what is the best option for us. So shipping lines are smart, then we have to be smarter now. Try to get the best deal and fair charges. Any more questions? Otherwise, we'll, yeah.
I have only a suggestion, if I can. Considering that this situation may last a bit longer, we hope not too long, but it's and the business does not stop. And this is a situation which the whole world is very well aware of. What exactly is transpiring in the Gulf and what we are going through and what businesses are going through. I think it is an opportunity that BMR or the traders to speak with their respective counterparts and customers in different parts of the world to ensure that the costing is already been taken care of. The enhancement of the charges are already been taken care of very well in advance rather than waiting for a later time.
Okay. So two very important questions and very interesting, I think very relevant for all of us. Most of the NBFCC licenses, their offices in Dubai. So is there any maritime or shipping body in UAE which we can approach in case, you mentioned about the court, but any authority or body where we can approach in case of these unfair charges or unfair practices are being followed?
Court is the only body in UAE where you can approach. The court is the one to determine whether independent shipping line has basically correctly charged or they have unfairly charged. Because that brings an admiralty action, and that is where the shipping lines are scared that the vessels may get arrested post-war.
Okay.
And
I think
according to me, to win in the court against a shipping line, Anshulbhai, is like it is almost impossible because shipping lines are hands and legs are cut when they give you a container. In the back of the BL, it's like a newspaper articles have been mentioned, which is nobody's reading it.
And also,
And they know the experience.
The freight also will be there, no? Damage retention will be there. Meantime, you go to the port, it will take a couple of months, and you cannot do anything.
Months or years, but
it
is hardly. I think Ravi Bhai also will confirm that there's even hardly one person is chance to give in because the shipping line before they give you container, they get you sign all the document which is nobody is reading it.
Right. Question from Prithviraj ji. Suppose you sell on FOB basis, FOB Incoterms, and container already loaded by us and it's on board. Now in this situation of war, who will cover the risk as the line is not allowing to take back the containers? Now the container is already in the port, but not on board.
So
they're not allowing us to take back the containers.
Understood. The Incoterms, F terms or C terms are the terms between the seller and the buyer. This has nothing to do with the shipping line. The shipping line is bound by the terms of the bills of lading. And under the bills of lading, as I showed on the screen, that the merchant is everybody, right? From the booking party to the shipper to the consignee. So the merchant is, and the way how the whole bills of lading terms are used, merchant is responsible. Now the question is, who is that merchant? All of them. So as if they are closer to you, sir, as you are the shipper, they will charge you. If they are away from you, closer to the receiver, they will charge the receiver. The liberty is in their hand because they have identified merchant as everybody.
Anshulbhai, we reached 235 people. Sorry, Roopesh, please go ahead.
Let me add what Ravi is telling is very valid point on the shipping line, the way they differentiate BL and the Incoterms. Similarly, insurance also, when you use the word where the risk transfers. When you sell FOB, the risk is transferred to a buyer once the goods are on board the vessel. And in FOB, the buyer pays you the shipping cost, and the buyer takes the responsibility of the insurance. You are out of the risk from the time the goods are on. So that if technically and legally, the risk is on a buyer to arrange things. Am I right, Ravi? If I say some on an insurance side of it, then you're not involved then on the costing, which is coming over and above what you're paid as per FOB up to the port. And that obligation you've already complied with, and the vessel is already selling. Now, vessel is not reaching to the port. It is a buyer to look out.
Actually, legally, buyer is responsible.
Correct.
Right. In this case, legally, yes, buyer is responsible. But now, as per merchant definition, both have to sort out the issue for the shipping line. Shipping line catch any of them. So shipping line is completely covered. They can even approach a bankers with this terminology. I'm so scared to even use a shipping line.
And Anshulji, I have been asked this question on several times. FOB cargo. I have nothing to do with the cargo. The moment I brought it at the port of loading, my obligation is finished. They have taken the cargo. Why is it that I'm being held responsible? And I said, because on the bill of lading, you are identified as a merchant as well. So they have looped you even because FOB or CIF or any other terms is between the parties, not with the shipping line. The shipping line contractual document is the bill of lading.
Right. And what will happen in case of insurance? With the point of view of insurance, who's responsible? The shipper or the consignee? It's FOB. So
in case of FOB, buyer is responsible to buy the insurance if you're an exporter. And buyer is required to pay the shipping cost.
And again, Prithviraj, again, it comes to the KYC of your customer. When you're selling on FOB, we have to be very careful. That person should be a responsible buyer who's completely obliged to pay all these charges if it is levied, or at least share with you, being reasonable commercially. So yes, I think we've answered all the questions. One last question from and then we'll end up the session. It's already 10 minutes overdue. What factors influence the amount of WRS surcharge? I think benchmark or ranges of WRS in high tension regions. So he's asking how to factor in WRS considering the cargo region, vessel. Is there any particular benchmarking or transparent way of charging WRS?
There cannot be because in this, I repeat, World War 2.5, unfortunately, these things are newly being hit on several people. So everybody is going haywire. The shipping line does not have a calculation ready with them that if the vessel has to come from Jebel Ali, what would be the charges? If the vessel has to come from Fujairah, what would be the charges? Or from Sohar or from Jeddah. The reason being is how much are they being hit by the insurance premiums, the other premiums, the surcharges. That is where the calculation will come. So every route will determine its own calculation as compared to having a standard fixed fee. It may happen eventually, but as of today, because the prices on the Persian Gulf is so heavy, it is impossible to determine that would there be a benchmark.
Right. Maybe we can ask whenever compare with the breakup, compare the WRS component and other components also. Then you can negotiate. Might give you better transparency. Any other questions? Otherwise, over to you, Wasim.
Thank you so much, sir. Thank you so much, everybody. At the end, I would like to request just one second. Yeah. So I would like to thank everybody for being a part of this excellent webinar. I would request Mr. Muzammil to give the vote of thanks. But before giving vote of thanks, Industry Connect is a very new platform that we have started in which we have having these webinars. Any member, any non-member watching this, if you want a webinar on a particular topic, if you feel that you need to, show your suggestions, you can call me directly. You can call my team. Our numbers are available. Please call us. Whatever topics you want webinars on, we are there to make sure that it turns into a reality. And whenever, whatever market situation would be, BMR is there for you. Mr. Muzammil, if you can please give the vote of thanks.
First of all, thank you, Team BMR, for organizing such a wonderful webinar. I think this was a great platform for all the members and non-members to understand so many things. As you rightly said, that we are open for more webinars to come with the new topics. And thank you, Roopesh ji, Ravi bhai. Thank you for your great insight, which will definitely help our team, our members a lot in one way or other. And if there is any question or any something, they will definitely approach through BMR team, and we will appreciate for this. And I think on a lighter note, about like 135 people, I think we achieved, and I think 30 people have left, almost left for the recycling business and moving into this shipping line business, I guess, because the shipping line business is more practical than the recycling. I can feel like 30 people left and finding the shipping line business now. Anyway, thank you so much for everybody.
Thank you so much. And by the way, we peaked at 150. There were totally 150 participants when we were doing it. And it's great to have this kind of a participation today.
So 20% people are going into it.
First of all,
Wasim.
Roopesh and Ravi, if you're okay, we'll collect all the questions if our members have and send it to you, where we can try to help them in these tough times.
You'll get
any questions, Anshuji, Wasim, share it with us. Of course, whatever best of our abilities and capacities, we will reply on the respective topics. Yeah,
you should get benefit.
Also, to all the members, we will be passing on the contact details of Mr. Ravi Jawani and Mr. Roopesh Pujari, so that if you want to have any contact, anything regarding your own businesses, you can directly contact them. Members are requested to kindly send us a message from which we will send you the contact details. Thank you so much, everybody. It's a pleasure.
You will be sharing the slides which were played today?
Yes, if Ravi sir and Mr. Roopesh sir, can we do it, sir?
Yes, please.
I have no objection. I would be more than happy to do it because it's very good to have those kind of
so whosoever wants it, please send us a message and we'll share the details.
There'll be a picture of the promotion for them and marketing.
Definitely.
Yeah. So we'll be
Vice
sending it to
versa
our members.
benefit. Vice versa benefit.
Absolutely.
That's okay. It's okay. Definitely. Okay.
Thank you.
Okay. Thank you, everybody.
Thank you, sir.
Thank you, everyone. Thank you very much. Thank you so much.
Thank you
and
to everybody.
good evening.
Thank you very much.